man, the criticism in the comment section from the video I posted yesterday is by no means in short supply. A lot of you have been calling me out since I sold Facebook stock, but newsflash, I also sold Apple, I sold Microsoft, I sold some Northland Power, and dare I say, I even sold some Tesla stock here, folks. But I think this is on the border of being over dramatized. So as I've done on this channel since I started it back in 2018 when I had a mere $100,000, in the clarity of my transparency, we're going to do an in-depth look into today's over $373,000 stock portfolio that I have built. But a lot of things have been getting called into question here because I make a lot of dramatic statements like I'm outperforming Cathie Wood. A kid in his mom's basement is getting over 30% annualized return and is even outperforming the ARK Innovation ETF. And I'm going to prove that to you today. And it's not out of a statement of being cocky. It's just a matter of I can't even wrap my head around how I've personally done this. But when I look back on, getting 1,000% gains off things like Canopy Growth Corp, off MyMed, off Apple, off Tesla, it starts becoming a little bit more easier to comprehend and understand. So if you appreciate what I'm about to show you here, just hit that like button, folks, because before we dive into the spreadsheet and show you my overall portfolio, I want to show you this report that I get from my bank every single month, which shows me my returns minusing my contributions. So this is just capital gains and dividends combined. And I'm going to break this down for you because I don't want to show you the account numbers themselves. So I'm going to have to explain this as a legend just a little bit here, folks, because I don't have the legend up top. So just take a quick moment. Let me break this down. Because as of September 2014, guys, that is when I first started investing. And this account is represented by this orange line. It's my longest standing account here. Now, next to that, in the next best performing account is my RRSP, which is represented by this black line, which I only started, and keep this in mind, toward the end of 2019. So that account has only been around for just over 2 years now. And my largest account is my TFSA, which is represented by the blue line, which I only started just over about 4.5 years ago in the midst of 2017. And to give you kind of a baseline, the green dotted line over the same time period shows the S&P 500. And then this kind of teal dotted line represents the TSX S&P, which is the Canadian Stock Exchange here, guys. So let me just give you these numbers just to kind of give you a full clarity here. In my managed account, I am currently up 388% since I started investing. My RRSP, which again, keep in mind has only been around for 2 years, is up 270%. And then my TFSA, being my largest account, is up 187%. Now, again, all of these were started at different time periods, so do keep that in mind because that changes the annualized rate of return based off the individual account. But I want you to keep in mind in the same 5-year time period, the ARK ETF is only up 211%. Again, when I say this stuff, I have a hard time believing it, but Cathie Wood can act like the best investor in the world. But if a kid in his mom's basement can do this and actually show you the real proof coming from the actual bank itself, guys, don't underappreciate your own capabilities here. I think people do that too often. And this is why, like, over these years, I've really learned to take everything people like Kevin O'Leary say, even in strides. Because I used to copy Kevin O'Leary and I lost a lot of money buying into the Canadian oil sands. I mean, I've been around the block a few times here, guys. So again, take everything everyone says with a grain of salt. Always do your own due diligence and your own homework. And on that note, folks, let's talk about the account. Let's talk about the sells, the buys, and everything else in between. Because when you look at this portfolio overview, I think you're going to start understanding what I'm doing here much better because I've been doing some weighted adjustments. As I told you in my TFSA, I am largely weighted way too much in certain companies because you have to remember, if I lose that money in those accounts, I can never get that money back. And that has always kept me a little bit on edge. And honestly, after that Facebook earnings call, it changed my conviction behind the company. However, I still believe that I probably hold more Facebook stock than most of you on this channel that are watching this right now, because I'm still holding a whopping 44 shares. So let me just break this down, my thoughts behind all of this and what's going on here. So many of you know Microsoft, Apple, Tesla are huge positions in my portfolio. And you can take a look right here, guys, and you can actually see what's going on with where they currently sit in waiting stance, because basically what I want to do is stabilize my portfolio going into this volatile market, which I'm suspecting is going to continue for the rest of this year. And I am by no means like bearish on Facebook over the long term. I'm bullish as all hell. I'm by no means bearish on Apple, Microsoft, or Tesla by any means. I just have a lot of those positions. Some of you, I don't know how much you have invested in those companies, but I have tens of thousands of dollars, right? So for me to just scale them back slightly to up some other weightings, it's not the biggest deal in the world. In fact, the biggest sale that I did was Northland Power, because it was just a massive massive small capped position in my TFSA, and I used the capital I sold, scaling it down by half by scaling up my TELUS position. So my TELUS position was one of my smallest stocks. I wanted more exposure to dividends, and I also wanted to get my telecom sector up slightly. So I added the TELUS stock. I also am planning on adding a brand new stock, which is basically going to be a Canadian composite index. So just basically like the S&P 500, this is the Canadian version of that. The ticker that I'm looking at is ZCN. Now, I haven't done that just yet because I have to wait for some of the sales to close out so I can reposition that money into other brokerage accounts, because I'm looking at topping off my registered retirement savings account. This is going to do two things: prevent me from paying capital gains on Facebook, because again, I've been in Facebook probably for a lot longer than most of you. And even though I sold yesterday around the 244 range, I still actually took capital gains, like decent capital gains on that position specifically. So I'm going to move it into the RSP because that's going to wipe out any capital gains I'm going to pay. And then on top of that, the extra money that isn't capital gains is going to deduct my income for this year. I'm going to use that money specifically to transition into what I want to be a Canadian composite index fund, because I want to buy more Canadian stocks. I want more Canadian exposure. It gets rid of some of the volatility against the US stocks, and I'm more heavily weighted toward the US economy right now here, folks. But again, I want you to take a look at this and just take your time with it, because I think it'll give you some solace and understanding that I'm not really bearish on any of these companies. Tesla is still my largest weighted position at 7%, right next to RioCan. Because Facebook dropped off so dramatically and because I sold some of the position, it now only makes up 4%. But I promise you, even if I didn't sell, it would have been drastically underweight, or the weighting would have come down pretty drastically. But overall, between Bitcoin going all the way to Tesla here, my tech stocks still make up 29% of my entire portfolio. So no extreme sells there. Like, I mean, it's nothing too extreme here, guys. But taking a look at the rest of the weightings before we take a look at this ETF that I want to add, guys, I have been adding to Bitcoin slightly. I think I've added over $200 to Bitcoin since the beginning of the year. I'm still cost averaging there slightly. But what I wanted to do primarily was stabilize my dividend income as well, because a lot of my dividend income was coming from a few strategic companies, which again, being Northland Power, I still think I'm a little overweighted in RioCan, but I feel like that's an ETF toward the real estate market, so I'm not nearly as inclined to scale it down, being my next biggest position next to Tesla. But overall, what I'm trying to do is protect the scale of my portfolio. Am I giving up some potential upside? Absolutely, but I still think getting rid of that volatility to some varying degrees is going to be much more better appropriated. And I think you can see that in the diversification of the dividend income, along with the diversification of the overall weightings in the portfolio itself. Now, again, taking a look at this ticker that I'm kind of analyzing, ZCN, I really just want to get some broader based exposure here. And honestly, I really like the Canadian economy here, guys. The Canadian sector is what's keeping my portfolio outperforming right now. And we can see that this ETF offers a 2.72% return. It has really low management fees, kind of almost next to VOO, but at 0.05%, nobody's complaining here. This has nowhere near had the performance of the US economy. I think over the last 5 years, it's only up something like 50% with the dividend. But again, guys, I kind of want to buy Canadian stocks. And when I look at what top weighted Canadian companies I'd like to buy, hell, I like Shopify here. Hell, I even like Enbridge here. I do like the Canadian National Railways, but I don't know what one to pick individually that's going to weight enough to make an impactful difference. And I figure because I'm just looking for cash flow, why not just stabilize the portfolio, get the index funds to about a 10% weighting? Because once I add this position, again, I haven't added it yet. I have done a lot of shifting, but I'm just, again, waiting for that capital to transfer over. It should weight my indexes up here, guys, between that and VOO to getting closer to 10%. That would make me sleep a little bit easier at night. As I told you guys, I'm trying to continually add and get these ETF weightings up slightly. Now, I think over the continued long term, I'm not going to be seeing the same kind of annualized growth. I just can't see that happening, but that's the problem at scale, right? I don't want to concentrate this portfolio into a handful of companies that could shoot up 20, 50, 100%, because then in moments like this, you're going to experience 20, 50, 80% downside risk, right? So this is just a sleep easy at night portfolio for me. I feel much better about these weightings, guys, and this isn't something that I just decided to do overnight. This is something that the Facebook earnings call kind of triggered me to do, but it's something I've been formulating in my mind for a while. And again, just because I sold Facebook stock doesn't mean I'm bearish on the position. I'm just not as convicted in the near term as I was waiting for VR, AR, and I still want ownership to like the fastest supercomputers on the planet, and that's offered by companies like Google, Facebook, Tesla, etc. etc., right? So just take the time here, guys. You can sit and look at this. My annualized dividends now are $8,747, which is absolutely wonderful, giving me a total return on this portfolio from a yield standpoint of 2.44%. And yeah, this is just some intriguing stuff going on here, guys, is everyone seems to be just crapping their pants, losing their minds, and I'm just chill as a cucumber here. It's not the end of the world here, folks. I'm like, everyone's making it out like I sold them some shill idea of an investment that went down, and I'm like, hey, you know, I'm down from my highs on Facebook. I don't know, guys. I'm not going to get too much into it. I just hope this gives you some clarity. It makes you feel and sleep a little bit better. I am still very bullish here. I love the markets, and I think in a 3 to 5 year time frame, we're going to be just trucking back along. We're just going to experience some midterm blimps, and again, it's easier sometimes to just turn the computer off and come back in a year, guys. I mean, that's what a lot of people should have done in March 2020, and they wouldn't have even noticed there was a crash. So keep that in mind. I pass the question off to you at this point, guys. What do you think about all of this? I'd love to hear about it in that comment section below, but stay cool, stay awesome, and as always, I look forward to catching you in the next one.